Let me move strictly to Asia, and really Asia, the story for Asia is really about very slow growth that we are seeing across the whole Asia. And we are seeing governments trying to respond to the slow growth by cutting interest rates, by implementing policies. However, the constraint is that some of the Asian economies are in a deficit program. But really, a lot of governments are doing is really, a lot of governments are constrained into this cycle because they have spent many years, especially after 2008, and a lot of them runs deficits. And when you run deficit, whether you are in a trade or budget, it puts your economy in a very precarious spot whenever there's a crisis that's brewing. Up on the list, very fortunately, you look at all the emerging market countries, up on the list is not Asia. There are worse countries than Asia, fortunately. Right? Whether it's South Africa, whether it's Hungary, whether it's Argentina, whether it's Venezuela, or these are worse countries than this. But we don't need to be compared to the worst, right? We should always compare to the best. But within Asia, there are a number of countries that exhibit both deficit, budget, and current account. Guess where Malaysia is ranked? This is not football, okay? Football, you all know where we rank, right? Not that very far away from the bottom, but we are ranked third worst, right? First is probably India, Indonesia. They represent the first two. Then Malaysia is there because we still run current account surpluses, and that's helping the economy because we are still a very trading in nature as the economy. There's a lot of manufacturing still exists, and with the weak dollar, weak ringgit, it helps the trade numbers. So the Asian side of the equation today is really weak because each country suffers their own little bit of problem, as I spoke about in the last time.